Hi friends, I'm back with one more video. Okay, so today's video is a very important video. So I'm just coming up with complete end-to-end series on the Ironfly. So when I say end-to-end series on the Ironfly, so this will be like we'll start from scratch, like what is Ironfly, and then we will discuss about all this potential, right? Various adjustments. So I have altogether drafted 12 adjustments. So this is only a draft, right? But today we are just talking about what is basics about the Ironfly. But in my upcoming sessions, as I've promised you, right? If you look at my YouTube channel, right, I've made a video like my upcoming series with all the adjustments. So I promised you to make a video on end-to-end series on the Ironfly with all like 8 to 10 adjustments. When I made this video, uh, I had like 8 to 10 adjustments. But if you look at my this screenshot, it has increased to 2 more. So adjustments are very dynamic, right? We cannot have limited adjustments. It all depends on your individual perspective, your risk appetite, right? Right. So as I've discussed, so I'm just making an end-to-end series on the Ironfly. All right. And even go to my YouTube channel to the playlist, right? So I have like started. See, you will find a series on ratio spreads. You will find a series on option strategies. You will find a series on debit spreads. This basically this all the 9 videos what we have in debit spread. Believe me, friends, this is like complete end to end on the debit spreads, right? And all these videos are like my real time trades. Okay, if you go to the risk management, I have a couple of videos on the psychology risk management, right? This is very important video, how to select the stock, right, based on the index and sectors. Okay, let me take you back to the presentation. Okay, so today we will discuss about Ironfly, right? And in the upcoming sessions we'll discuss about all this 12 to 14 adjustments. After today's basic class on Ironfly, I'll just give you some high level context on what are all these adjustments. Okay, so let me take you to sensible. Okay, this is a sensible. All right, so I'm just deploying, so I'm using the sensible ready-made. I'm just deploying the Ironfly just to save your time, right? See, I can take an example in Opstra also, but Opstra I need more manual effort, but sensible will help you, right, in showing you all these adjustments. So right, this is my Ironfly. So what is Ironfly, right? Ironfly is nothing but your straddle. This is your straddle. So whenever you're adding the edges to the straddle, so that will become your Ironfly. I think this is a very basic thing to know, right? Straddle, the moment, this is your naked straddle, right? So whenever you're adding edges to the straddle, this will become your Ironfly. Or in other way, this is combination of two credit spreads. So let's say I'll deselect these two things, C side. So what is this? This is your put side credit spread, right? See, we have a buy and we have a sold. Like this is nothing but your put side credit spread. Okay, I'll just deselect. I'll select the call side. This is your, what do you say, your put call spread. Sorry, what I mean to like your credit spreads, right? So basically your Ironfly is combination of two credit spreads, right? This is one set, right? This is one of your credit strategy, credit spread, right? And this is one of your credit spread. So combination of two credit spread will form the Ironfly. Or else you can say a plain straddle, right? While adding the edges, this will form the Ironfly. See, naming, do not go to the naming conventions, friends. See, beat, strangle, or you can name it with your name also. The basically this is like combination of two vertical spreads or else a strangle, right? Where we have added the edges, so that will form your Ironfly. Okay, so if you look at the max profit, this, right, basically you get majority of the time you'll get 1:2. So because I've selected the Ironfly, let me get it to this thing, right? Okay, see, basically majority of the time you'll get 1:2 or 1:2.5 in terms of max profit and max loss. Probability of profit will be very low because market has to end between this range, between this triangle range, right? So probability is very low, but you have to be like very good at adjustments in terms of getting into like good profit. See, Ironfly, it's a kind of strategy. If you are very good at doing the adjustments right, at least you can get with minimal zero, or you can get with minimal profit. But if it favors you, right, if the market goes in your favor, or if the market is not volatile, and then you'll end up into good profit, right? Actually, I name Ironfly as ice cream, meaning it's as good as melting ice cream. So you have to enjoy your ice cream before it melts. So whenever you see a good profit on day one, day two with 2 to 3%, you have to book the profit. But we're not discussing about the strategy, we are discussing about what is iron fly. So anyways, we have these many adjustment session. Believe me friends, one each adjustment will be like of 30 to 40 minutes. So this is one repository for iron fly. I think you do not need any other iron fly sessions. Believe me, I'll put my entire effort in terms of creating the entire series on iron fly. I've named it as end-to-end series. All right, so you can rely on this. So maybe today we have 12, right? Tomorrow you might have 14. So you might be in dilemma. Why 14, right? It all depends on individual perspective. See, I can sustain, I can get into profit by using this only this two, or else I can have the combination of this 1 and 6, or else have the combination of 4, 7, 8. It all depends on individual perspective, you know, right? Everyone has their own trading style, right? Someone will like this reverse buying, some traders will like the calendar edge, some traders will like the shifting of the straddles, few will like the broken wheel, right? We're not discussing about, right? So today we are discussing about the this thing. So we have discussed about risk to reward. Probability of profit will be low, but we have to adjust. Capital required is 40,000, but for adjustments ensure that you have like one if you have like 1.5 or 2 lakhs of capital, I think you're good to trade with one lot of the uh, iron fly. All right, and right, this is like basically you get like 1:2 risk to reward. Okay, so let me take you to the Greeks, right? This is very important, right? Ironfly is a credit strategy. All right, Ironfly is a credit strategy. So obviously your Vega will be in minus. Your Vega will be in minus because you want falling wicks. You want wicks to fall, because you know that I've already made a video. If you go to my this thing, right, see everything is interconnected friends. So just go to this playlist, wix based strategies. If you watch this wix based strategy, you will come to know. Because if I start talking about the Greeks in this session, right, the video will become very lengthy. You go to wix based strategies, there is a one very good video, one or two videos, I mean, wherein you'll get what is all about the wix. Okay, let me take you back to the sensible. So obviously we need the falling wicks, we need the falling wicks. Okay, and then you have theta, you know, right? Theta will keep increasing as and when we go close to expiry. All this I've covered in this video friends, wicks based strategy. All right, let me come. So this is about your wicks, right? And one more thing would be, yeah, see, it is not a standard saying that we need to take the sold position at the. And one more thing friends, look, do not get influenced by this maximum profit. Many of the retailers, including me, when I started the trading, right, I thought 10,500 was maximum profit. But friends, this 10,525 you will get only when the market ends at 34,600, meaning when the market ends at this cone. See the price 34,600, right? And it is very difficult out of 10. Maybe you, if you are lucky, you'll get like 1 out of 10. But do not get greed or influenced by looking at this maximum profit. Maximum profit only when it ends at your two sold positions, right? If your market ends here at 34,820, you will get only 5,000. If your market ends here, you will get only 1,525. Check the black box. If your market ends somewhere at 34,300, you will get only 3,000 profit, right? And the maximum loss, you know, if anywhere, if the market, right, expires above your break even and below your break even, I'm talking about this break evens, right, you will end up into maximum loss. I think keep a check on the maximum profit and maximum loss. It doesn't mean that you'll get 10,000. It all depends the market expires at the expiry. All right friends, and the one more thing is like, yeah, it is not a standard wherein you need to have the Ironfly deploy at the ATM. See, now my bank nifty stands at 34,591, right? So I've deployed uh, a strangle by taking 34,600, right? So let's say, or else I'll do one thing, right? Let's say, what if I do not have this leg, the CE wing leg, right? This is a broken wing, right? This is a kind of broken wing fly. So let's say if your view is sideways to sort of bearish, right? Market will not go up, right, based on your price action. This is tough to say, but just assume you are very good at price action already. If bank nifty made a 10% move, and you are pretty much sure that market will be sideways, or else it will be like bearish. So then you can deploy this thing. You can just avoid the wing on the call side, right? This is your broken wing fly, right? Check at this wing, right? If you do not want this profit, right, if you want good range, check the range. You have 1.86%, right? So I'll do one thing. I'll just try to uh, go inside, right? Go deep side. So 34,100, right? I'll make it 34,000. See, your range will increase. So what I'm trying to do, I'm trying to create more range by decreasing my profit on the put side. See, I'll just go 100 step down, right? See, now on the bottom I have like 50 rupees on the expiry, but check the range. From 1.7 it has increased to 2, right? If you're sure about in your price action saying that the market will be like sideways, you will get good range. So let's say I'll just go 100 points down, right? Your loss will increase here. Your loss will increase, but you will get good range. See, you will have good range on the bottom side. You have 2%, almost 2% on the downside. It all depends on your individual perspective, your risk appetite. Okay, if I increase this, right, then the range will start decreasing. See, if I'm increasing, check the range 1.9. If I increase 1.86, if I increase, this will go to 1.7, but your profit is increasing on the downside. I'll just leave it to you. So this is biased based deploying the Ironfly. All right, so let me make it to right flat, and then what I'll do, I'll just deselect and I will add the wing on the call side. Simple. If your view is sideways to mild bullish, you can deploy this strategy. And right, you can just play around with your leg. If you do this, your range will increase. If you increase by 100 points, your loss will increase, but you will get good range here. You're getting range. See, I'll increase this. Just keep an eye on the call side. Your range has increased to 2%. Right, if I increase with 100%, your range has increased to 2.1. On the downside also, see, this range is increasing basically, right? This all depends on your individual perspective. Okay, I will clear the trade, and let me show you. I'll deploy one airplane. Let me say you have the view of bullish. All right, so it is not mandatory that you have to deploy the Ironfly at the ATM. So let's say you are bullish. So I'll go uh, let's say 34,800, right? I'll 34,800, I'll go 300 points, right? Okay, so you wanted to deploy a bill, right? I have 34,900 one PE cell, and 34,900 one CE cell, right? In line to this, I'll just increase my break even. Okay, see, okay, this is I have the bullish view. So I've deployed my Ironfly in such a way that, right, my view is market will go up. So I'm just deploying this biased Ironfly. Check the market. The vertical line, the vertical green line is the one where your market stands, right? When I'm like bullish about the market, at least like 1 to 2%, why should I deploy at the ATM? So I'll go like 200 to 300 points OTM, and then I'll deploy my Ironfly. So in line to this thing, I will buy my wings. See, these are not standard thing, friends. I'm telling you, right? Everything. So do not, even if someone is telling, right, you have to sell these two ATMs and whatever premium you got, right? Let's say 500 and 290. So you have to combine this and you have to take the break even. No, that is not the standard process. It all depends on your view on the market, right? So now I've deployed a biased Ironfly. I mean, just to having the view of bullish. So if market comes, maybe let's say if market comes, it makes a gap up, or it makes a momentum of like 0.1%. So market will stand here. So I mean, for me, there is no need of doing the adjustment. So let's say market was here center. If market added 1%, so again I need to do the adjustment. So now, anyways, my view is bullish, right? I've deployed a biased bullish. So even if market makes 1% move, my trade will be like very balanced. The price will be in center. I'll get into good profit, and I do not need any adjustments. Let's say if the market goes down, right? So then, right, we have all these adjustments. Okay, this is what, whenever the view goes wrong, we need to come up with all our adjustments. So what adjustments we need to select, it all depends on you. Anyways, I'll make all the adjustments videos, and you have to select based on your trading style. All right, friends. Okay, this is this one. I'll just clear this trade. I'll get into the normal Ironfly. Okay, so we discussed about basic things, right? Your maximum profit, maximum loss. We can have the bias based iron fly, right? And don't get confused with the butterfly, right? Many people will get confused with butterfly and iron fly. See, iron fly, we have two sold positions, right? Put and call. What happens with butterfly? Butterfly will have either two PE, right? We sell two PE quantity, and we, so let me show you like how does the butterfly, like I'm just converted to butterfly. Hope this works. Okay, clear the trade. Okay, this is the butterfly. Let's say I'm deploying, okay, butterfly. Okay, I'll go for, not sure, it's been like, right, I'll go for two quantity, then I will buy one. I'll buy one, right? This is your butterfly. All right, butterfly is like, you have two sold positions of same PE, and then you will take 100 points up and 100 points down to make it the butterfly. So we have all the PE legs. Unlike in the Ironfly, we have the combination of PE and CE cell, and inline to that we have the edges. But in butterfly, you will have only the PE legs. If you want to convert this to CE, you can just convert it as, see, there is no deviation, there is no difference between put and call. But the only reason why we go for put side is like we get the premium. So this is the butterfly on the call side. Okay, and one more thing, let me go back and convert it to Ironfly. And there is one new change, right? I mean, one this thing, like whenever uh, okay, very important. So whenever we go for Ironfly, we need to consider the wicks, right? Right, the more premium we have, the bigger range you will have in the Ironfly. It doesn't make sense, right, if your wick stands somewhere at this one 10, right? It doesn't make sense to go for the Ironfly, because you'll end up getting very less premium. Even friends, even everything I've covered in this video, again I'm telling, if you want to uh, get like deep knowledge on the Ironfly, you have to be like very good at wicks. I mean, I told you that all the option selling is all about wicks trading. We call them as wicks traders, we call them as IV traders. This video is going to be like very important, so I cannot discuss every time, if not the video will become lengthy. So I wanted you guys to watch this video, right? I'll show you one example, right? Let's say your wicks is at 10 or 14. See, I've taken this simulator, I've taken this week wherein the wicks was low, right? 6th of what is it, June, July, and expiry. Market is standing at 35,400, right? Check this. I mean, just to save your time, I've just created already, I've just created for you. What is this? 35,500. Okay, 35,500. Check the premiums. You are getting 288 and 100, right? When the VIX was down, right? Check the premiums now. You are getting 450, 382, almost double the premium of the say 100, and you are getting on downside 382, right? Here it was like 288, you are getting a premium of 445. So this is where, friends, whenever you have to go for Ironfly, basically whenever the VIX is high, you should not be deploying the Ironfly when the VIX is low. You can do one thing, you can see, I mean, I think that, see, this is what I was trying to discuss. You can make uh, this one of the adjustment, right? Where did that go? Yeah, this one, deploying the calendar edge. I think this video is going to be like very interesting, friend. So whenever the VIX is low, but still you want to go with Ironfly with low VIX, right? So you have to convert your edges to calendar edge, right? This will discuss unnecessarily, I'll make it complicated now, but this video is going to be like very interesting. What I mean to say is, whenever the VIX is low, Even if you want to go for Ironfly, you have to convert this edges to next week. You have to convert this edges to next week expiry, right? The moment you do this thing, whenever there is a huge increase in VIX, so just check the profit. I'll get it back to this thing. Whenever there is a huge VIX, you'll see the profit. See, you will see the profit. But again, I'm telling you, everything I've covered in this video. This is very important uh, video, friend, right? And let me show you one example where the VIX was. I'm just trying to cover this month, right, wherein the VIX was so at such a peak. So let's see what premiums we are getting. I've deployed. I'm just trying to show you in the option simulator for the 9th March when we had that COVID time, right? We are at 920. The market stands at 19,700, right? See the premiums we're getting 980, 800. Don't you think almost double the premium what we are getting as on today when the VIX was at the peak? Right, this is the ideal time to deploy the Ironfly. And even I've covered everything in this video. I mean, this is a prerequisite video for the Ironfly, friends, because Ironfly being a credit strategy, right, you need to know the in and out of the VIX. All right, friends. So let me take you back to this thing. So I think we have covered pretty much on what is basics about the Ironfly. I mean, even you can go to other YouTubes, right? You can just come. But today I've shown you, right? Ironfly is nothing but a strangle, right? Which where we buy the edges that will become your Ironfly, or else, right? Two combination of vertical. This is like credit spread on the P side, and there is one more, the combination of credit spread on the C side. We have discussed about the 1:2 risk to reward and your break even, right? Your range, capital required, right? And we even discussed about the Greeks, right? The moment we bought the next week expiry, check your Greek, your Vega has become positive, because this needs the rising VIX, because we are long on Vega, right? If I get this to this week, right, obviously that will become minus, because we need falling wicks. We are shorting the Vega. Let me quickly take you to the adjustments. Anyways, I'm planning to come up with 12 to 14 videos, right? So this is one of the adjustments. Whenever the view goes wrong, or in terms of locking your profit, in terms of increasing the range, right? So we go for adjustments and shiftings. Reverse buying, this is altogether a different system. If you do not have much capital, right, you can just go with reverse buying. Do not, even if you have like 50 to 60,000 of capital, you can just, by doing the reverse buying, you can get good amount of profit. See, that's what I've did. We don't even need any extra margin deployed to purchase the naked options. We can just go for the reverse buying. You know, right, what is reverse buying? I mean, see, I have to just explain you. I think this will become lengthy, but let me quickly show you. See, reverse buying is something like you have deployed a trade. So let's say the market comes. I'm just trying to simulate. Market breaks your break even. What we'll do, we will just shift the PE legs, right? We will just shift the PE legs, because by this time the premiums of the PE might have become very cheap. We will shift the PE leg, right? From the break even to like 200 to 300 points, right? I'll discuss then. What will happen? Your PE side will become green, but we end up giving only minor, like maybe like 5 to 10 rupees of premium. So this loss will get added to your call side, and then we have altogether different adjustments how to mitigate the call side, right? By selling extra options from the opposite side. See, when once your break even is breached on the call side, we will start selling the what do we say, P from the opposite side, just to mitigate this loss. Let me show you, right, what will happen if I sell one PE. Let's say I'm selling, right? See, the moment I sell, right, your loss on the call side has become mitigated, and moreover you're into profit just because of selling. But now your loss on your put side has become unlimited, right? We will discuss very detailed in the upcoming session. I'm just giving you a crux actually, right? By selling extra options from opposite side, let me take a pointer, right? This one, right, by selling extra options from the opposite side and also shifting the buy. This is combination of, basically I'll just exit this. This is combination of, right, what do we say, this is combination of, yeah, shifting your put, shifting your call, and then buying the naked sales from the P side, right? This is like we can buy options on the testing side on the intraday basis, right? Whenever the market is going, see, whenever the market has breached your break even, if the market is going up, we can just buy the options, right? Not selling, we can just buy the options on the testing side, right? Just to get the benefit of the uh, momentum market, right? Just on the intraday purpose, just on the intraday, end of the day we will just exit that trade, right? Deploying the calendar, this is going to be like very interesting video, right? I've told you, right? Just now I've shown you just converting this buy to next week calendar, right? By shifting the straddle. So let's say you have deployed the straddle, next day market is almost at the close of your break even. So rather than doing the adjustment, we can just shift the entire straddle to uh, on the call side, so that again this vertical line will come into the center, so your trade will be balanced. I'll show you like how to do the shifting of the straddles, and this is only applicable on Friday and Monday. So just in case if you're deploying it on Thursday, right, the next day Friday, if your break even is based on either side, on the call side or on the put side, we will just shift the straddle uh, on Friday. On Monday we will not do this on Tuesdays and Wednesdays, right? Deploying a broken wing, this is one of the very good strategies. So whenever your break even is about to breach, you have to deploy a broken wing fly, right? Broken wing fly is like you have to deploy one more iron fly at the break even, without the wing, without the buy edge on the put side, right? We will discuss this in detail. This is called the broken wing fly. The advantage of broken wing fly will be it will give you some additional range, and also the beauty of this thing is, right, your maximum profit range will increase. So I'll show you whenever we have a separate session on the broken wing, so to get the additional range, right? And also we have to shift. So this friends, I've just drafted this for my reference. Actually just wanted to show, this is not complete because I think you'll be not able to understand. This is for my notes, but ensure that I will be telling you each and every single point when I'm making a separate video on all these 12 adjustments. All right, you can deploy a ratio split. So whenever your market reaches your break even, you can deploy a call ratio split to get additional range, right? That will work very good using intraday for balancing the optional. Let's say you end up into losses, right? You can just do some intraday trading. I'm not an intraday player, but I do intraday to manage my positional trades, right? I do that on an intraday basis, right? And there is like one more thing, like selling the naked options at 3:20 p.m., right? On the Wednesday. So let's say you are at a good amount of profit on Wednesday, right? Let's say you are like 8,000 of profit. So I can, treating this as a reference trade, I'll start selling on Wednesday at 3:20 some option at 30 points or 25 points to get some additional credit, right? At 3:20, and also at 9:30 a.m. on the expiry day. So let's say market has open flat. I'm very good profit on the call side, right? I'll start selling the naked put at 9:30 on the expiry day, right? The same way applies on the either side. All right, then selling additional options, right? This is one strategy, right? So these are all different strategies. I'll not try to make it complicated, right? So I'll make a detailed video, and that's it, friends. I think you can just watch, wait for my videos to be out. I think we have started at least with the first video which I was planning to start, uh, right? Which I was planning to start since from last 1 month. Okay, so I'll do my best to come up with all this 12 adjustments, right, within a week of time, or maybe within 10 days. So daily I'll plan to launch one each video for one adjustments. But today, right, today what is the conclusion? So we have learned about what are the basics about Ironfly, what is the risk to reward, if Ironfly can be biased based. We have seen the Greeks, right? We have seen what the VIX has very important role to play. We have seen like Ironfly can be combined with the calendar legs. We have seen, we have talked about your maximum profit, maximum loss, right? And we have talked, we even discussed about the difference between Ironfly and the butterfly. All right, friends, so I think time for me to conclude this session. So friends, please start subscribing my YouTube channel because I need support from you. And again, I'm telling before concluding the video, this video is very important, not only for the Ironfly, be it any strategy, be it debit strategy, be it credit strategy. This VIX based strategies video is very important for you. All right, friends, so thank you for watching, right? Please share with your friends. Glad I made it less than 30 minutes. I thought this will go for 45 minutes, but at least I was able to deliver within 30 minutes. Like, thank you, friends.